Hello and welcome to the special edition of the Prime Playbook, where we explore the ideas shaping the future of finance and business. As the financial ecosystem undergoes rapid digital transformation, Fintech is no longer just an enabler, it is redefining leadership culture and the way institutions operate at scale. To discuss this evolving ecosystem and what it takes to lead in a digital first world, we are now joined by Dhiraj Relli, who is the MD and CEO, HDFC Securities. Dhiraj, always such a pleasure to speak with you and get your interesting insights and talk more from the investing landscape as well. And one of the things that have changed, that has changed rapidly over the last couple of years, is how there is a rapid shift to digital. How are brokerages or institutions or houses like yours talking about the fintech transformation? So when we say fintech, what does it mean for HDFC Securities?
Thank you for having me. I, Let me just give you a perspective that in last 10 years, India has adopted digitization in a large way. I think it's post demonetization as well as post COVID. We've seen the rapid assimilation of digitization. People are increasingly more and more comfortable with the digital applications, and that's something has evolved in the broking space also, because this is something where you get limited time, 9:15 to 3:30, almost 375 minutes, and every fraction of a second matters. That's where if you have to service the large customer base, you can only do concurrently when you have a digital properties available with you. So that's where everyone has focused, and particularly in the transaction oriented businesses, we have seen significant disruption coming in from the fintech players, because it's hard to disrupt the fund based businesses, but transaction oriented businesses are easy to disrupt. That's where in the payment space and broking space, in financial services per se, we've seen significant evolution of fintech players. And that's what prompted the traditional brokerage houses also to recrystal their business model and work on the digital properties. I've been in HDFC Securities for last 10 years, have gone through the significant disruption coming on from fintech players on pricing as well as on the digitization side and the leveraging of technology. And we have been an early adopter of the technology. We've been, unlike what perception is that the traditional brokerage houses are not at par with the fintech players, but I can tell you, we've been investing on the digital properties. We have InvestRight application, which is a full service application. It's backed by the full scale investing. It's backed by the all possible tools, and it's at par with the all possible players, or even better, because we also offers research recommendations in the application. So that way, digital properties have come really long way. And at HDFC Securities, we had earlier dependence on the vendors to develop some of these applications. So the transformation or the change we have witnessed in last few years is that we have now engineers on board, we have UI UX team on board, we have product teams on board who are relentlessly working on developing and improving these digital application every day. So that's what have been a journey for us, and we've really evolved in a big way in terms of adopting the differentiation through the technology landscape.
That's really good to know. And you answered my next question. I was going to ask you, is there dependence on external vendors, or now companies have started having their own, employment pool or employee pool who's looking at that? So clearly, you've moved to internal dependence versus external dependence when it comes to technology. Post-COVID and post-demonetization, as you said, a big wave of digitization came back, and that led to a big competition in terms of a lot of players coming into the fintech space as well. What was one of the biggest learnings that you thought should be taken from those new age fintechs? And one of the things that you did differently or traditional brokerages are doing differently that helps an investor or a customer look more at you versus the new fintechs?
I think the pricing was convoluted for most of the traditional brokerage houses. It was based on the percentages, different pricing for different customers also, segments of customers. What fintech player did that they came out with a flat pricing, per order pricing, and that actually democratized the investing. Whether you place an order for 10,000 rupees or a 10 crore rupees, you're charged the same brokerage. I think that really was one thing that shook the entire traditional broking ecosystem, and that's where they've got larger market share. If you look at it, 75% of the new onboarding is still done by the fintech players. So that's where we've launched HDFC Sky, a discount broking platform. We are the only large traditional brokerage house who have launched a full scale discount broking platform, because we believe that that's the way forward for us to go and service the large segment of new customers who are absolutely looking at do it yourself platform. What they are looking at, an institutional scale credible platform which can provide them necessary solutions, research recommendation, and at the same time bring in absolute transparency and simplicity on the pricing. So that's something have helped us to acquire more customers. In last 2 years, we've acquired in HDFC Sky over 2 million customers, and that's helping us to getting the desired scale. Of course, we service high ARPU customers, average revenue per customer, through the active engagement also, and that's something works well for us, because some of those segments of customers are still looking at an active engagement, though they do the execution through digital platforms only.
Okay.
But some of those customers who need to do large transactions still need validation,
course.
confirmation. That's where they like to speak with the equity advisors and experts and relationship managers before they taking call. Some of them, because they do transactions once a year, once in 2-3 years, are not so much acquainted with digital properties, and also little bit worried about the fat finger. They may put in wrong quantity. That's where they take help of relationship manager to execute the orders also. But those customers who have been transacting on a regular basis find very easy, simple to deal with the different applications and do their business with that. And that's where over 95% of our customers are actually executing their orders through digital properties. Gone are the days
95%.
where 95% customers.
Oh, so how does it change the structure of your team then? Like, you do have equity advisors, you do have team which would be doing things manually, speaking to clients. How does customer engagement change in that case from the employee perspective of any brokerage house then?
So I can talk more about us.
Yes, of course.
We in 2015-16 we had dealers. We have transformed these dealers into relationship managers in last 10 years. What we have done, that we have got them educated on different products, not just only direct equity. They were just punching orders only.
Correct.
So we get them acquainted through the mutual funds, PMS, AIF, and NPS, and many more products. Today they are actually working like a wealth relationship managers only, and they are all certified. We have one of the largest certified team, whether it's MP certification or IRDA certification. So these are certified resources who are actually helping customers in taking the right decisions. Now, after you take a decision, whether you execute through relationship manager or you execute on your own, that's something customer decide. 95% of our customers are more comfortable with the digital properties on when it comes to execution, but when it comes to decision, they do like to speak with the relationship managers. Like, I'm sure you would also in your social interactions getting this as a question: which is the right mutual fund scheme
Oh,
to
yes.
invest in?
Absolutely.
Or right now, which one sector, one stock I should invest in? I think this is where they need confirmation, validation, and also help. And that's what is the more. So it's all about the decision, not about execution.
Got it. And decision is the most important thing,
Yeah.
right? That's where you need some expert advice, and that's coming in from your team. In that case, while we are seeing the shift from traditional to digital, manual punching to digital punching, as you said, fat finger errors, cybersecurity errors that can be there. So, does it mean more investment in cybersecurity, more investment to make the transition where 95% are now punching it via the digital means? Does it become a little tricky for brokerage houses?
See, what we need to work on is that 100% availability. You can't even be 99.9% also, because that's what customer expect from us. So one has to work on moving away from a traditional monolithic architecture to scalable architecture. So that's where they want. Customer expectation is that I want availability of these digital applications. The second thing they expect is that this should be very simple. Ease of doing transaction is something very critical for them because they want to just come and execute their orders. So that's where if you can give them a platform which is having very limited steps. So like in IPOs, most of the customers invest in one lot only, and we pre-filled all of these things. So one click investment. So you come, just do one click and your IPO investments are done. Similarly, if you can minimize the number of clicks, make it very simple, easy. Like from a watch list, you can place an order. From a chart, you can place an order. From a portfolio, you can place an order. That's something very, very important and critical. I think post decision making also, I have seen that customers who are not transacting every day are also still coming on the application to just on a real time check their portfolio, how portfolio is growing. So portfolio is becoming one section which is the most visited section in our application.
Everyone wants to check that, but considering the times that we are in, and I want to ask you about that because you've seen market cycles over years. We've transformed to tech, but we are still in an era where wars are happening, and that has created or eroded a lot of wealth. In that case, are you still seeing more interaction with the app, or there are more calls to your team? And that is something that helps more in case of uncertainty like this versus technical integration that we've been talking about.
So portfolios are bleeding,
Yeah.
so there is a significantly higher pain than what we get to see in the headline indices. So that's where customers are really worried and they are, actively engaging with the relationship managers. What can I do at this stage? Of course, they are skeptical of putting incremental investments. So they are sitting on cash if they are sitting on cash and they want to time it to the perfection. Nobody can, but
Yeah.
they're still holding on. In fact, some of the institutional players are also sitting on the cash at this stage. So there is an active engagement on portfolios pain, and also they keep checking the new research recommendation. Like we keep coming out with the research call. So one thing that we have come out with is portfolio optimization. So what that tool helps customers to see that are their portfolios are concentrated, they are high beta, low beta, are they concentrated in particular sector, particular stock, and it's a multi-asset portfolio optimization. So if you are holding direct equity as well as have holding indirectly through the mutual fund or PMS route, it gives them an overall 360-degree picture of their portfolio so that they can take a better decision on optimizing the portfolio. So at this juncture, more discussions are happening on how to optimize the portfolio rather than bringing in new funds.
Bringing in new funds, not somebody with who should be a big risk taker to be thinking in that direction as well. In the conversations that I've had with you, I've realized that you are a person with a lot of ideas, and you want to do better with every change that's happening in the world. Digitization has been one of them. What next in terms of transformation, say from traditional to fintech? Do you think we can do more in what we are doing in the digital way right now of people investing, brokerages doing their function? What is that one bet that you think should be taken by brokerages or at least by HDFC Securities?
So we are looking at leveraging artificial intelligence to the core and voice as well. So a lot of customers are, not looking at navigating through the applications. They are also comfortable with the, voice. So if voice can help them to at least engage with the application, that will be great because execution finally they'll have to execute the order, but they can go to the order panel by engaging through the voice only. And a lot of information dissemination can be done through the AI enabled agents, and that's where we can reach customers at scale like you are doing. You have a news on a particular sector, particular stock, or a major news regarding war which can impact their portfolio significantly. Now, either customer watching your channel, then they get the information. If they are not watching, they'll not be able to get to know. They are busy. They have their own life. So that's where we are giving them the soft nudges which are pertinent, relevant, and relevant to their portfolios and stocks in their portfolios. Let's say in particular stock, there is a significant event and that event has to be informed to them on a real time basis. That can be done through the with the help of AI agent. You can give them a simple message, or can be even a voice based message sent to the customer about the particular event on their stock they are holding in their portfolio. So that's hyper personalization is something we are looking forward to achieve. We are doing already that to large extent. We are trying to bring it to the scale.
Okay. So scaling something, even from a digital perspective to AR perspective, or from traditional perspective to a fintech perspective, are there some resistances that you face? What are some of the challenges that big houses like yours see when you have to make that major shift?
I think the significant shift we have done in human capital is that we have changed the composition of the human capital. We have over 300 plus engineers and technology team members. So it's almost like a tech company we are
Yeah.
running rather than we are running as a distribution firm. So over the years, our franchise in terms of distribution has got more consolidated, but we've invested more on the new age talent, and that's where we are seeing the now fruits. We are seeing our digital applications are getting far more resonance from the customers. Of course, those who were there in the brick and mortar model and servicing the limited set of customers were always skeptical about the digitization and were not sure whether we can achieve this 95%
Yeah.
kind of customers transacting on digital properties. So that's where we saw the resistance, but it's a part and parcel of transformation, and only you can bring in agility if you have your own team members focusing on the digital applications. Yeah.
Okay. So, that takes me to the next question around customers,
Yeah.
because your organization is customer first, customer obsessed, let me put it that way. So, pricing is one of the things that you've changed after what happened in the market.
Yes.
App experience is one of the things that has changed. What are the other things that is a part of customer obsession, so to say? What are other things that you see can be done or are already done at HDFC Securities?
I think the plethora of content that's available in the market, and many influencers and pseudo influencers who are not qualified, equipped, and also registered with SEBI have been giving wrong misinformation to the customers. So we've taken that on our stride, and we started to focus on lot more on the content creation side. We are educating customers on the various instruments and portfolio constitution, and as well as on the markets, and customers do not differentiate between the absolute return and the IRR or XIRR, because they are buying and selling at different quantities and at different times. So some of these areas have been really focused for us, and we've been working on. And we've also, through our social responsibility CSR activities, also worked on films which have brought into the scams and talking about how the scamsters are working and how the customer should not fall prey to the fake applications or scams that are going on. So we work very closely with the exchanges and SEBI also on some of these initiatives to educate customers. See, these are testing times. Last 18 months have been difficult time for the capital markets, and we have seen significant volatility and pain in the portfolio. I think these are the times when institutional credible players and media players like you to work on creating right kind of an environment for investors to understand that they will sink and swim with the markets. But there are like we all as a consumer grab opportunities when there are sale going on for a particular product we like. Similarly, now stocks are on sale.
Correct.
The quality companies, their franchise is great, their business models are great, and it's only because of the geopolitical events some of them have corrected 30-40% and are available at a very reasonable valuations. I think that's where one has to focus more in terms of engaging with the customers and helping them to understand that these are the good times to invest in the markets with the long term horizons. Somewhere, educating them the difference between the trading activities
Yeah.
versus the investing. And saving and investing they've understood. Trading and investing they've not understood yet. That's where I think we are trying to focus our energies, and that's where we believe that we can do a significant value addition to our customers.
It is someone's money, so it has to be taken very seriously.
Yep.
And that's exactly what you and I are trying to do with this conversation as well. I would have asked you a lot more when you talk about stocks on sale, but that'll be for some other conversation, other podcast as well. But that is exactly going to be my next point on how digitization makes things available for everybody. But then again, we have to be very mindful of what we are consuming as content as well. There can be plethora of content thrown at you. You have to also realize if it is coming from a credible institution like a brokerage like yours or media house like ours. So when we talk about digitization being the core of traditional houses now as well, so how do you decide whether you have to outsource it, you have to partially partner with somebody, or keep it internal completely? Do costs change, or do reliability change? Does the reliability change if the structure changes on how you take those services on board?
I think the first and foremost, it's the agility. You have to have your on team members working on the customer feedback. If you're dealing with the vendors, it impacts your agility. So that's where if you have to be nimble footed and you want to respond to the customers reviews on the social media platform and want to improve your application as and when on a real time basis, when you receive the feedback, you need to have an in-house team members, and that's where we transition. It is difficult, it's more expensive affair, as well as hard to retain the tech talent, because the tech talent naturally gravitate towards the tech companies. That's where they see growth also, but they were not seeing growth in the financial services companies. But that has changed in last few years, and now they know tech talent is fully aware that the financial services companies have transformed themselves to a more tech first companies, customer first companies than financial services company. So that's where everyone have been investing, and that will give you an edge. So it's about the focusing on the proposition. If your focus is on improving your proposition, that's where you need to work on with the different talent, and you have to have an in-house talent. So that is the decision, and also the scalability is very important. So you got to work with the different architecture when it comes to the scalability and availability.
So in that case, what has been your biggest learning? I'll ask you two learnings. One, this transfer or shift from traditional to digital media or offerings. And second, considering that we are in such a difficult time in markets, and you are somebody who's seen cycles, who's been through so much and an expert at that, what would your advice be? But let's first talk about your learnings from the shift that we've seen.
So it's all about reach and richness of offer. The reach is no more of a physical footprint. Reach is all about your how you can reach the target segments through the digital properties. That's something very clear. You can't serve 1.4 billion people in India if you are looking forward to serve over the years through non-digital methods. So that's one. Richness of offer is about the proposition. It's not just about the pricing. It is far beyond the pricing. What exactly you bring, what value you bring on the table, how that value is perceived and consumed by the customers on a day-to-day basis is something you have to keep focusing. And this proposition is different for different segment of customers. For somebody, it could be just how fast I can execute my order. For somebody, it could be how can you help me in making the right decisions, how you can help me in optimizing my portfolio, or how you can help me in on a regular basis monitor my portfolios. So these are different. So one has to continuously evolve on the proposition side. There are set of niche customers who are looking at now algorithms to place their orders also. So they are looking at whether you can bring in the right kind of an algos. Now SEBI has permitted us to also have algos for the retail, and that's something we've been focusing on. And some of these areas, if we believe that we do not have and somebody has mastered it, that's where we do a partnership and we bring in those partners on board along with us and serve our customers better.
Got it. And before I let go of this very insightful conversation, I have to ask you about your learnings because people don't know, maybe the first time investors or maybe even the savvy investors, because the last 18 months, as you've said, have been very volatile. And in time like this, when you said the companies have not done anything, but the stocks are still falling because of an external factor, how does one go about investing in that scenario?
See, there's a saying in the market that trend is your friend. And most of the people actually take it more seriously than they should. If you, they are just following the trend and they are not doing proper assessment of their own return expectations and risk appetite, that's where they go wrong. I think the simplest answer what you can get is that go for a asset allocation based on your age profile, your risk appetite, and your return expectations. If you are expecting returns plus minus 10%, then you got to have a different portfolio versus when you expect plus minus 15%. So that's where one has to be mindful when you are constructing your portfolio, and at regular interval balancing your portfolio is the key. We've seen that how gold, silver, and also equities have moved in the last few years, and to some extent even real estate as well. Particularly in metros, real estate have also done well. In fact, last 4 years, all possible asset classes have done
Done
well.
well, yeah.
Yeah, in tandem.
Yeah.
So I have not seen this kind of a time where in tandem all asset classes are doing well, and now we are seeing the reverse of the same. All possible
Or-
asset classes are facing the challenge. So having the right portfolio allocation, depending upon your own return expectation, risk appetite, is the name of the game. And be more focused when it comes to understanding your portfolio. Discuss it with the right set of advisors and take right advice before changing the portfolio.
Trend might be your friend, but advisors definitely are your friend.
Yes, yes.
Thank you so much. It was such a pleasure having you again on the show with us. It's always so much learning when we talk to you. So thanks a lot for tuning in.
Pleasure is all mine. Thank you.
And with that, we'll take your leave on this edition, but stay tuned to CNBC TV 18 Prime for more news and updates.